The last 3 months, I pulled $250,000 from the stock market directly, and a lot of you have been witnesses to this because I've got 1,000 members on the Patreon, paid and non-paid, free, who see my exits, my entries, and I actually shared and documented all of that on social media in September 2023 before I got into swing trading. Now, I started closing some positions October. You see, when I used to share my statements, we were closing some positions in Bitcoin stocks and whatnot, but recently I just started sharing with you my actual exits, which, by the way, you can see a lot of people are following it who are on the inside. I'm here to motivate you in this video to tell you what's possible when swing trading, because a lot of you think the big money is just in day trading, and that's, we know, 95% success rate. Actually, the big money is in swing trading with lower risk if you have enough capital, or if you're happy with what the market is going to give you, which, conservatively speaking, on average 10% to 15%. And this is the market for it, because tech is relatively cheap. Emerging markets is relatively cheap. A lot of people, when I told them I'm swing trading in September, they started giving me their opinions. And I understood the market was shaky at that time in September. And that's when the market, before the market rose by 20%, the overall market. And I'm here to tell you guys, not just to inspire you with results, but I'm here to tell you that this is your job as an investor and swing trader, is to guess the future, to guess what's about to happen next. I don't care what analysts say. I don't care what JP Morgan says. JP Morgan, everybody else has their own opinions. My opinion as an experienced trader, I'm not JP Morgan. I'm actually in the trenches. JP Morgan is not, right? These analysts, they look at data for today and they say, let's scare the market a little bit, when they know for a fact the future data might say otherwise. So this is what you need to do as a beginner investor, beginner swing trader, and even day trader, is to gain experience by being in the market. This is what's missing in your trading career today, is experience. Without experience, you cannot hold on to your guns. And by the way, this is going out to crypto traders today and holders. This is a problem in the crypto world where they see crypto today that is cheap, it's not moving, and they say this is not going anywhere. This is not a good investment. This is, you know, it's a big pullback. I better take whatever is left of my money and walk away. Well, like I said, your job is to sell in a bull market, not to buy in a bull market. You buy when things are bad. That's like buying a property in another country and saying, you know what, the price is going to rise in the future. How do you know? You don't. You just perceive it. You're guessing. And this is what being a trader means. It means you guess based on today's data and future data. Today's data, we don't care. Today's data will cause this short-term volatility. Upcoming data, GDP growth potential. Do you believe the economy will do well in the future? Do you believe that the world is going to shit because of wars and is going to continue going in that direction? Is that really your belief? Well, if that's your belief, then there's no point of even going to work. There's no point of saving money. There's no point of even living, right? When everything is gloomy to you. We bet on the future. We bet on the economy. We bet that crypto is going to go all-time high because the US debt is all-time high. We bet that even if the US debt doesn't influence fear and has money, inflow into Bitcoin, then the positive outlook of the economy is going to cause Bitcoin and crypto to shoot up in value. And similarly, we're doing this with tech today. Do we believe tech is cheap? Absolutely. Do we believe consumer staples are cheap? Relatively so. Do we believe there's a pullback? Maybe. So I'm not here to tell you about technicals. I don't care about technicals. All of these trades you guys have witnessed and you've seen the last 3-4 months that I took was not based on technicals. All right? It was not based on technicals. What it was based on is a simple belief that future tech is cheap, and it's cheap for a reason, because there was pressure from the overall market, treasury yields, fear of inflation. People are not buying. People are sitting on the sideline to see if there's going to be money coming in. And I said, you know what? I've been in this market before. I've seen it. I know what it's like. And I entered it. And I even went to the extreme, putting my credibility on the line and taking some of you with me, right? Making you follow me. And if I was wrong, the heat comes back to me, right? It all goes back to me. And I took that responsibility for $12 a month. So I'm here to tell you guys, experience is the last missing part in your trading journey. And unfortunately, the only way to gain it is if you get embedded with the market today, taking that risk. Sure, money is 50-50, right? That's what trading is. 50-50. 50% chance you might make money. 50% chance you might not make money this year. Maybe the market will drop. Maybe that stock's not gonna, do what you want it to do today. But you're betting on the future. And if you're betting on the future, you're gonna hold. So this month specifically, I closed about 40%, right? So you can see here's one position closer, Domo. Most people don't even know what Domo is. And when you're not looking, you're gonna actually miss these opportunities. Here's Domo. And you can see all these positions closed. Here is Fastly. All right, a lot of people don't know what Fastly is. Open. What is open? Right? PayPal, we know PayPal. 11. So these specific trades, actually, I think there was about 50% closed this month. Yeah, January, 8%, 11%, 12%, another 12%, and another 12%. Okay? That's about 50% in 1 month. So if I put 10,000, divided it amongst 5 stocks, I made 50% of 10,000, which is 5 grand. So my money's now sitting at 15 grand. Would you make that as a day trader? Possibly. Possibly you make that in a week if you use leverage. But is it guaranteed that this will be, a consistent thing? Probably not. Because with day trading, as you keep doing it, you're risking and exposing yourself to a new outcome. Because not every outcome is the same as the last outcome when you were day trading. So today I'm trading an earner report. The earner report says it's going to be a V-shaped pattern because of this and so and so. Well, I trade the same earner report with the same structure, same setup as the last trade. Is it going to be the same? No. So that's not consistent. So you will need experience to actually gain that consistency as a day trader. And most day traders we know, 85-95% lose. Okay? That's if I'm trading stocks. But if you pin it down, well, you will need time to pin it down. But alternatively, swing trading, you can get into it and you can actually make that steady money. What's the problem with swing trading? Timing. Timing is where most traders fail because, and I get it wrong sometimes, right? I time it wrong sometimes, especially when we enter a penny stock. Penny stocks don't follow rules. And it's very rare that I would enter a penny stock unless it has something, a use case, and it's working. But timing is really what makes a swing trader profitable. And I'm not using any technicals, guys. I'm not using none of that. Don't let anybody fool you into thinking you need a course to swing trade. Do not let anybody fool you in thinking you need some kind of algorithm or tool to make 50% in a month swing trade. What you really need is experience. You don't have it, I have it. Which is why I'm here sharing stuff with you guys. And it's in your best interest to listen. Smash that like button as well. So, that's all I wanted to do in this video, really, is inspire you and give you a quick talk. So if you choose to do it, you understand. Now, yes, there will be a pullback in the future for tech after it makes a new all-time high, of course. But other than that, I think 2024, second half, maybe late 2024, we can start a bull market. US debt is getting out of hand, of course. We can start some sort of movement to the upside. If we get a pullback, we'll be waiting for it because we're anticipating it. And we're trying to hedge as well by entering different sectors that hedge against the overall market. So I'm playing it smart. I'm not just diving in, oh, this is cheap, let's buy it. No, we don't do that here. Okay? That's all I wanted to do. Hopefully you enjoyed this. Hopefully you learned something new, guys. Follow me on Instagram, and I'll see you next time. Peace.